This is a demonstration of exercise 522, journalizing purchase transactions. Howie Jewelers had the following purchase transactions, and the problem asks us to journalize all necessary transactions and explanations are not required. So our first transaction is on June 20th. Howie purchased inventory of $5,100 on account from Sanders Diamonds, a jewelry importer. The terms were 215 N45 FOB shipping point. So the first terms that we see pertain to the discount and when the invoice is due. If Howie pays the invoice amount within 15 days, they can take a 2% discount. Otherwise, the net amount would be due in 45 days. The FOB shipping point means that Howie will have to pay the freight charges for the diamonds, and they also assume any risk during shipping. So to record the first transaction on June 20th, we would debit merchandise inventory for $5,100 and we would credit accounts payable Sanders Diamonds for the same amount. On June 20th, we also paid the freight charges. So we would debit merchandise inventory for $400 and we would credit cash for the same amount. On July 4th, we returned $600 of inventory to Sanders. So to record this transaction, we would debit accounts payable Sanders Diamonds for $600 and we would credit merchandise inventory for the same amount. And then on July the 14th, we paid Sanders Diamonds less the return, so we did not make the discount period the 15 days. So to record the entry to pay Sanders, we first calculate how much we owe them. The original invoice was $5,100, but we returned $600 of inventory. So the net amount is $4,500. So we would debit accounts payable, Sanders Diamonds for $4,500, and we would credit cash for the same amount. Then on July the 16th, we purchased inventory of $3,500 on account from Southborough Diamonds, a jewelry importer, and the terms were 210 in end of month FOB destination. So again, the discount terms are pay the invoice in 10 days and you can take a 2% discount, or they owe the net amount by the end of the month. FOB destination means that Southborough Diamonds will be paying the freight and they will also have any risk during the shipping period. So to record this transaction, we would debit merchandise inventory for $3,500 and we would credit accounts payable Southborough Diamonds for the same amount. On the 18th, we received a $300 allowance from Southborough Diamonds for damaged but usable goods. So to record this transaction, we would debit accounts payable Southborough Diamonds for $300 and we would credit merchandise inventory for the same amount. Then on the 24th, we paid Southborough Diamonds less the allowance and the discount. So this time we did make the payment within the discount period. So let's first calculate the discount. The net amount of the invoice after the return is $3,200. So multiplying that by 2% gives us $64 for the discount. So to record that, we would credit merchandise inventory for $64. Then to the debit to accounts payable would be for the original amount that we of the purchase minus the return, or $3,200. And then we would credit cash for the net amount, $3,200 minus the discount, or $3,136. And that is the conclusion of the demonstration for exercise 522.